All right, let's continue here with silver. We're still on the weekly time frame. And what I'm just noticing, and let me show you, I'll draw it on the chart so we're all on the same page. Once price manages to break through this resistance here, assuming that it is headed higher and not going to roll over for some reason, um, we're likely to see a pretty fast move up to this. What is that? 1870, 1865? Yeah, somewhere in there. Anyway, over 18. Maybe we stop. You know, it looks like there's a little bit of 16. Maybe we see a little bit of reaction. Let's clone this line and pull it down there. Yeah, maybe there's a little bit. So I might expect to see a little bit of activity, push pull. You know, maybe price pops up here, tests that for resistance, has to work a little bit before it can push through. Then there's, yeah, I'd call that a whole lot of nothing. And then we're on up to 1850 or so before we test that resistance level. So anyway, I thought wanted to make that point. Once we get through this current resistance, silver's not got a lot of overhead to deal with. Now the next thing I want to look at, this same phenomena is going on in both silver and gold, where we have on the left side of this screen, we're looking at a chart of the silver futures. And so we can see that on Friday it closed at 1578 there. On the left side of the screen we have the spot price of silver, and on Friday it closed at about 1545, almost 1546. And so that, you know, what is that, 30 cents, 32-cent delta between those two doesn't, I'm not used to seeing that. It's only been in recent months where that has been a thing. And that delta is evidence or suggestive of a shortage of physical metal. One of the things that's being written currently is that it's not a shortage of physical metal. It's just that the physical metal is not in the right place at the right time, and I'm not sure that I really buy that. My BS indicator kind of goes off at that idea, but you know, who knows what the truth is today or any day for that matter. But the point is that, like gold, silver has this same delta between the futures and spot price. And just to show it, here we are. This is now gold, and gold futures on the left is 713. Gold spot on the right is 1701. So $12 delta. 14, $13 delta in gold. So that's all I'm going to say about gold today. So now let's continue with silver. This is the daily chart, and let's not lose track of that. And I just want to make the point. My intent is not only to look at the charts, but to maybe provide an example for people who are on the learning curve. You know, maybe I can provide some assistance to you. So anyway, let's keep this on our chart. For whatever reason, price seems to be respecting that line as a support resistance level. And so we'll leave it on our chart until that is no longer the case. And so let's zoom back in. Apologize for popping around so much. So is there anything here on the daily? I think here on the daily what we can see is, yes, now on the daily chart we want to look at a 50 and a 200-day moving average. And the only reason we picked those numbers really is because those are the numbers that everybody else is looking at. And so self-fulfilling prophecy, if nothing else, price is likely to respond at these levels just because everybody has them drawn on their charts, and therefore we want to have them drawn on our charts, um, just so we know where they're at. Some interesting price action here. So we can see that was actually Thursday. So big strong bar, price bar here on Thursday. Price surges up through the 50-day moving average. If you're drawing chart patterns, that downward wedge there, price poked up through it and closed right at that level. And how you draw your trend lines, that's a very subjective thing. What I'm doing now, if you notice, I'm trying to catch the very tops of these 2 points.